Today we're going to talk about how a negative risk to reward ratio could be the tool set that you need to remain consistently profitable during turbulent times for your trading or portfolio. The interesting thing about a negative risk to reward ratio is that not a lot of people either use it or realize that they're using it. And I usually know when someone's using a negative risk to reward ratio when their win rate is really high, because the risk to reward and probability are all directly intertwined. If you're looking for something that yields you a high reward, that is significantly less probable than something that yields you a small reward. It's the distance between where you enter and where you take profit that creates that risk to reward and probability structure. And I can show you more of that later, but this is my backtest results from me grinding using a negative risk to reward ratio. This is a cumulative backtest, and this took me a few months to do this. I did this by hand. This wasn't computer. I did this by hand, and I'll show you some of my trades. But I ended up with, on average, a 67% risk to reward ratio. And this is like all of my back test. And the other one I think is like 70%. And you really want a high. You really want it to be like around 70 to use a negative risk to reward ratio. Profit factor 1.5, and the average was about 0.72. Now let me find a actual back test. So on this one, I started with a balance of 2K, which is really low, but I wanted to simulate account growth for maybe the average starter trader. 2K might even be a lot, but 2K is a good amount to start trading with. I had a 74% win rate, profit factor 1.6, and the average R is a 0.56 on here. And as you can see, the equity curve is going up and to the right. There are some dips, but I started to aggressively try to grow the account. That's why the account compounded so fastly, is because I was leaning on that high probability of winning the trade to grow the account. And if you have something that's high probability, you should be positioning sizing higher, because the probability of you winning that trade is higher. And this was just going up and to the right. And if you look at some of the losses, they're sizable losses, but I won so much that I ate the losses. And most traders, they try to do the opposite, where they lose a fucking ton. They lose a lot all the time, but then eventually they win something that eats the losses. It really just comes down to what type of person that you are and how consistent you can be with your strategy. I see with inside of me, at least, and sometimes other people, that whenever you consistently lose and lose and lose, it damages your psyche and it damages your ability to follow your strategy properly. And the opposite is, if you're winning, you might even feel so confident that you're doubling down and you're increasing a position size, which is what you need to do to grow your account if you're starting with a small balance. Let me go inside of here and show you some trades, because I want this to be more educational. Okay, so the way that I trade is I just go level to level, usually a quarter point level, and I'll make this 1 so it's easier to see. And this is essentially what I did continuously, and the only thing that changed was what was happening in the market. But all I did was I waited for the market to get to a really important level. There are important levels in all markets, and for Forex, and usually commodities as well, crypto and everything. There are the quarter levels, which are 25, 50, 75, 100. And the whole numbers 0, 0, and 0.5 are really important. So I place limit orders at these levels, and I look for a small reaction, a small move off the level. And the opportunities that it gave me were so plentiful that I was in and out of the market flowing. Now, there are other things that increases your win rate and it decreases your drawdown, and that's DCAing into a trade. And that's something else that I did, but I mostly did it on the 1 hour when I did that. For this one, this was just like a simple day trading strategy where I was just in and out of the markets, really, really quick scalps. But something else that would help if you're a higher time frame trader would be would be something of a risk structure like this, where you enter here, you have a stop loss like this, and you're looking for a move like this, and you enter here this first position with a starter. So you enter this first position with a starter. If that goes into drawdown, so you're looking for something like this to happen, and if it doesn't happen and it does something like this, you enter another position here. You enter another position here. Now you have two trades that are open. This is in drawdown, this is in profit. You wait until this gets either up here or close to over here. You close this trade for a break even or a loss, very small loss, and this is a profit. And you was only able to get out of that trade because you were able to think in probabilities and know that sometimes your first entry is not gonna be the right one. It's not gonna work. And that's just how the market is. It's nothing to do with you. It's nothing that you need to take personally. You're just trying to guess what's going to happen next. So you take this trade up. I'm in drawdown, no problem. I scale in, I buy again, I close this for a very small loss, and I get in this for a win. And on the second trade, you don't even have to have this stop loss all the way down here. It could be right where your first one is, and now you have a 1.1 to 1.5, which is a better risk to reward ratio, right? But I find traders thinking very rigidly with how they flow in the market, and I don't know how helpful that is, because I didn't really get consistent until I started trading with a negative risk to reward ratio. And it's not something that I use all the time, but it's something that's definitely helpful, and it's definitely a skill set to have when you need to just be in and out of the market. So I just really just did the same thing over and over again. Here, same thing. I was in buys. This one hit TP. I jumped back in. It hit TP. I was done. Trading could be that simple. It could be, you don't even have to worry about whatever, catching a whole move and shit. If that's what you want to do, but the longer you're in that trade, the more you have to monitor it. And I feel like most people don't realize that you should be trading for your time freedom, so you don't have to sit at the screen all day. Same thing. Look, I'm just taking the exact same setup over and over again. Look, retest. I'm in, out, in, out, in, out, in, out. Just scalping just scalping the moves. Here's a loss. Same thing. Same setup. It failed. It happens. Guess what? It failed again. It happens. Guess what? I jumped back in. Profit. And I was done. Here we go again. This one. Drawdown. Look how much drawdown this trade was in. Look. Drawdown. And then it popped back up. Drawdown. This one was a loss. This one didn't get stopped out. Drawdown. Boom. People try to do this thing where they have their stop loss so fucking close to the market because their position size is so big that any major aggressive move against them is going to blow their account. And I don't think that's the way to do it. The closer your stop loss is to your entry, the more likely it is that you're gonna get fucking stopped out. So let me show you. let me show you this, because we really need to drive home this. This is Solana price action. That's some whole other shit. All right. So this is a standard 1-to-1. This is what the average retail trader tries to go for. Let's bring this down here, right? This is usually what I'm looking for to get in and out of a scalp. Is something like this. And probably, and I'm not even closing the whole trade here. I'm clipping out. I'm scaling out of the trade. The more it goes, the more the market moves up in my favor. So the more the market is moving up here and stuff, I'm clipping it at these highs. I'm clipping it, you know. Or you don't have to clip it. You can just get completely out of the trade. It's up to you. But this is what the average retail trader is trying to do. They're trying to get their stop loss as small as possible, saying that this is where the market is going to reverse, and I want my reward to be all the way over here, so I can, you know what? Let's be conservative and say they're trying to get like a 4-to-1 or a 3-to-1, you know, somewhere around here. You can get those moves, but look how far you want the market to go compared to this trader right here. Look how fast you're going to lose if the market does some shit like this and then goes up to your take profit. You see what I'm saying? Like, you're out of the trade right here. This trader is still in the trade. You're out of the trade. You aren't even fucking wrong about the trade. Your stop loss was just so damn tight that you're strangling your trade because you don't want to lose too much money when you should be actually worried about winning the damn trade. So I say this to say that experiment with it. I did this by hand, y'all. Like, how bad do you want it? Is the question that people should be asking themselves. How bad do you want it? I don't even trade Forex no more. I trade crypto because I just like the volatility over there more, and I'm over there more monitoring my portfolio. So I'm just like, I'm just going to trade crypto because I trade the same strategy. But I wouldn't know how profitable I can be. I wouldn't know how successful I can be without backtesting, without sharpening my skill set. I had some losing backtests. I've tried just so many different things, but it really wasn't until I started to trade differently, trade in a way that I just tried to be different with how I moved in the market. I tried to think differently. I tried to say, what I'm doing is not working. There must be a different way. And a lot of people are just ramming their head against the wall, trying to do whatever their favorite guru is telling them to do. And it's just not working for them. So figure it out. Try something else. I'm telling you, this shit works. I'm showing you right now. This works, but you have to try to practice it. You have to go experiment with it with yourself, and you got to go see, does it fit your personality? Because it might not fit you. You might be like, this is dumb. Why would I risk 100 to make 50? Well, it's just the probability of the trade working. It's just the probability of that trade playing out. That's really all it is. It's just, I focused on the probability over the reward. And I know that as long as my probability is high and my trade management is good, I'm going to have an equity curve that goes up and to the right like this. And here on this back test, I almost fucking blew the account. I was aggressively trying to grow the account, but guess what? I survived the drawdown because my win rate was so high. It just skyrocketed up and to the right, baby. Up and to the right. That's what you want for your equity curve. That's a consistently profitable trader. That's how you eat your losses and go straight up and to the right. But I know it's probably gonna fall on deaf ears. This is already a long video, but if you made it this far, I think you're gonna make it. Just believe in yourself, keep grinding, stay focused, and never lose sight of your goals. Peace.